Yes, good evening to all of you, and welcome to our classes on management accounting. So, yeah, good evening to all of you, and I welcome you to our first class on management accounting. Now, as you know, this is one of the core papers of MBA as a subject, and this comes as a part of accounting as a whole, but yes, you have got financial accounting as one of the core paper and management accounting as another core paper, right? So I am Professor Manas Mayur. I am going to teach this subject. This is my email ID, where I can be contacted, and other details I'll give you, while taking these classes. First thing first, objective of this course. So, because we have got 12 sessions devoted to this complete subject. Okay. So, for some of the topics, I may not be able to go into much of the details. So, my objective here is to give you a big picture of management accounting, so that you can understand how things fit together, right? So, I mean, the story should be known to you. The details may or may not be, taught to you, or you may not be remembered also. So, here my objective is to give you the capacity to understand the theory and apply that in real world situation, the techniques that have been developed in management accounting so far. This is how your study material it has been designed. We have got 8 units. First unit is on understanding cost. Second is overhead analysis. Then job cost analysis, process cost analysis, marginal costing and CVP analysis, decision involving alternate changes, budgetary control, and standard costing and variance analysis. So we have got total 8 units, and in next 12 hours of sessions and 4 classes, we can easily divide 2 units per class, right? So this is how we are going to deal with this subject. Now, out of these 8 chapters, your initial first and second chapters are mainly theory based, and other chapters, especially from 5th, 6th, 7th and 8th, they are purely mathematical and numerical based chapters. Okay. So while we'll move to chapters from 5th, 6th and 7th, so I will be using Excel or calculator to solve some of the numericals here. Now all of you are going to appear in online mode. So, and you will be in your exam, you are going to get questions in objective form, right? So keeping your exam also into the consideration, I'll take this subject in the same manner. These are some of the suggested reading. As far as exams is concerned, your study material and the slides and notes will be more than sufficient for you. But in case if you want to know more about cost accounting or management accounting, there are some books available. For example, Introduction to Management Accounting by Horngren, Sundam and Stratton. This is one of the very good book available on this subject. And in Indian context, Jan and Naran, it is a very popular book amongst the cost accountants. So you can refer to these books, but yes, not from the, as far as exam is concerned, I don't force you to read these books. There are websites related to accounting where you can find information related to accounting, some data related to accounting. And here in some of recent research which are done on accounting and finance as a subject. Now we will start with unit 1, which is on understanding cost. And after studying this unit, I expect you to understand the basic cost concept. You should be able to classify cost into different categories depending upon the purpose of the information. You should be able to differentiate between cost unit and cost center, and we should be able to identify the basic terminologies concerned with cost ascertainment, you should be able to explain the different methods, techniques and system of costing. So once our chapter 1 is complete, I expect you to understand all these points. Now let us see where management accounting, how this subject has been placed as far as the MBA complete curriculum is concerned. Now we have got accounting as the main subject, and accounting may be defined as a system of collecting, summarizing, analyzing and reporting information about a financial system of a company. And it has got two branches. One is financial accounting and another is management accounting. So these are two branches of accounting, right? Now how these two differ? Financial accounting provide information to outside parties, shareholders, creditors, government, general public and so on. Whereas management accounting concerns itself with accounting information that is useful to the management only, right? So financial accounting basically it is for outsiders. Outsider means the shareholders, the creditors, government, general public. So and these outsiders are also investors, creditors whose investment in that company is at stake. So outsiders are generally interested in knowing how this company is doing in terms of its financial position, right? In terms of its profitability, in terms of its financial health. So for those things, financial accounting is the relevant subject. Whereas management accounting concerns itself with the information which are useful for management or for the insiders. So insiders could be managers, it could be the owners of the firm, it could be the employee of the firm. Okay, so those information which are mainly useful for the insiders comes under management accounting. The preparation of financial account is a statutory obligations, whereas management accounting is entirely optional. So using financial accounting, you prepare annual reports and other financial statement which are mandatory for any company. But management accounting, because it is the information related to insiders thing, so this is entirely optional. Company may opt for going for management accounting, or they may not opt for going for management accounting. Now management is designed to serve as an aid to managerial decision making. So financial accounting is mainly it is for external reporting, whereas management accounting it is designed to serve which can help firm, their employee, their manager to take decision. Now cost accounting, sometimes it is interchangeably used with management accounting, but it has got in terms of uses some different meaning, right? So cost accounting is it mainly deals with costing of a firm, whereas management accounting is more of managerial decision based subject. Okay, so management accounting takes help of cost accounting in order to take decision. So but nevertheless you can find the chapters overlapping in these two subjects, and you can find sometimes you have got subject like cost accounting, and sometimes it comes under management accounting. So anyway, now what is a cost? A cost is a sacrifice or giving up of a resource for a particular purpose. It's a very general definition of a cost. When you are ready to sacrifice something for a particular purpose, so that is a cost for you. So it may not be necessarily be in a monetary term, but it could be anything. So anything which is sacrificed comes under cost. Expenditure incurred. Yes, you can say, but then there is a difference between expenditure and cost, and we'll see what is the difference. Now cost accounting is that part of accounting that measures cost for the purpose of management decision making and financial reporting. Now when costs are used by outsiders to evaluate the performance of the management and make investment decisions, they are said to be used for financial accounting purposes. And when data are used inside the organization to evaluate the performance of operation, activities and so on as the basis of decision making, they are said to be used for the management accounting purpose. So cost could be used for both. It could be used by outsider, it could be used by insider. So outsiders mainly want to know how much is the outlay of a firm, that's all, because the outlay is going to affect the overall profitability of that firm. And insiders, they want to know information related to cost so that they can take better managerial decision, right? So cost efficiency is very necessary for any firm, because that efficiency is going to be reflected in the calculation of profitability. And as you know, profit is equal to revenue minus cost. So if cost is reduced, automatically your profit should increase as far as this equation is concerned. So for the same level of revenue, if the overall cost has been reduced, so it can affect profitability in a positive manner. So it aids, it helps in decision making, because manager wants to know the cost something. Now we call this something as a cost objective or cost object, which is defined as anything for which decision makers desire a separate measurement of cost. Example of cost objectives include departments, products, territories, miles driven, patients seen, tax bills sent, student hours taught, etc. So anything for which manager want the cost estimation, it becomes cost objective or cost object, right? So suppose there is a taxi business, a business whose business is to run taxis. So for them, miles driven will be a cost object. Okay. Similarly, for hospital, patient seen could be a cost object, right? In educational institute, student hours taught could be cost object. So manager wants to know how much is the cost associated with these cost objects. Now in a manufacturing business, the cost of product sold include the total expenditure on material, labor and all other production cost. Each of these costs must be first measured, then accumulated and finally distributed to the work in process, finished good and cost of goods sold. So the cost should finally be reflected in the finished good. Okay, the estimation should be reflected in the finished good, because if you are not ready, if you are not if the cost is not completely absorbed in the final or finished good, then it may lead to wrong estimation of cost, which may lead to wrong estimation of the selling price of that product, because the product should be sold at such a price where you can have margin for yourself, right? Then the amount of profit reported by a manufacturing company depends on the accuracy of its cost calculation. So as I told you, because a profit is revenue minus cost, this is one. So the calculation of cost should be accurate. And second, because you need to decide the selling price of your product. So in order to decide selling price, the estimation of cost should be very accurate. Yeah, so before we move to the cost classification, there is a difference between cost and expense. So can you tell me what is the difference between cost and expense? Expense may not be related to production. Cost is buying the raw material. Expense is to maintain the business. Okay. Cost is for material acquired. Expense is for services. Okay. Yes. Cost is for material acquired, expenses for services. Okay, I am waiting for more answers. because normally these terms are used interchangeably, but still there is a difference between these two. Yeah, so expense is a type of cost, okay. It could be notional. Okay, now let us see how do we differentiate between cost and expense. Now see, we defined cost is the sacrifice, right? So cost, I'll take an example here. Suppose a company has purchased, let us say, some raw material, right, at 50,000 rupee. Yeah, so suppose a company has purchased raw material worth 50,000, okay, and the company could use 40,000 of that raw material for that particular year, and 10,000 worth raw material, it was not consumed in that particular year. Okay, now the raw material which was not consumed, it is going to be consumed in next financial year, right? So here 50,000 is cost of acquiring the raw material, 40,000 is expense, okay, 40,000 is expense, and 10,000 is an asset. I'm repeating, company has purchased raw material worth 50,000, and at the end of the year company could use raw material worth 40,000 or consumed raw material worth 40,000, and the 10,000 worth of raw material, it is lying with this company which will be consumed next year. Okay, I'm assuming they are not perishable. So here in this example, $50,000 is cost for that firm because that is the cost which company paid to acquire the raw material. 40,000 is an expense and 10,000 is an asset. Now asset is something which produces cash flow in the future. So this 10,000 worth of raw material, it is an asset because it is going to be used in the future, it is going to be consumed in the future. So for that particular year, it will be considered as an asset for the firm. Now the $40,000 which was consumed, sorry, 40,000 worth of raw material which was consumed in that year will be an expense of that for that firm. So expense is that part of cost which has been consumed, right? So you can say cost can take two forms. It can create expense and it can also create asset. So expense is consumable part of cost, whereas asset is the non-consumed part of cost which is going to be consumed in the future. Is it clear how expense is different from cost? So as someone says, expense is a type of cost, right? So cost is a bigger entity and expense is a part of cost. So next we'll move to cost concept. Now you see, here our objective is to estimate cost accurately, right? Those who have not studied this subject may think the cost estimation should not be a very difficult task, right? But if we consider the types of cost which occurs in any businesses, you will surprised to know it is actually very difficult to accurately measure or estimate the cost, because there are so many different types of small types of cost which may not be traceable sometimes, and if you are not able to trace these costs properly, then the selling price is going to be affected because of that. Okay, so that is why it is very important to first understand how many types of cost are occurring. Okay, yeah, intangible, tangible both. So you need to first understand, the types of costs which are occurring, because when you understand how many types of costs are there, then only you will be able to estimate the quantified value for those costs. Now our first chapter is purely based on cost concept or cost classification, or to know how many different types of costs can incur for any business. Okay. Now in cost accounting or management accounting, we will mainly take example from manufacturing sectors, right? We won't be taking examples from service sector or other sectors, because manufacturing sector they have a very clear cut business structure. I mean, they manufacture and then they sell, right? Whereas in banking or service sector, their product is little different. So that is why in management accounting we are mainly going to take examples from manufacturing sector based companies. So the first classification, which is a very general classification, direct cost and indirect cost. Now direct cost are the expenses on materials and labors which are economically and easily traceable to product, service or job. Accountants can identify direct costs specifically and exclusively with a given cost objective in an economically feasible way, whereas indirect costs are expenses incurred on those items which are not directly chargeable to production. Indirect cost cannot be identified specifically and exclusively with a given cost objective in an economically feasible way. We can often identify plausible and reliable output measures, which are also known as cost drivers, which can be used to allocate these indirect costs among the cost object. Now here the first classification is direct and indirect. Now direct costs are those costs which can easily be traceable to a product. For example, take an example of Pepsi can. Now in Pepsi can, the metal which is used for the manufacturing of can is very much visible, and also the cost of the metal per can be calculated in a very easy and economically feasible manner, because you can calculate how many sheets of metal has been used divided by number of cans produced. So that is an example of direct cost. The indirect costs are those costs which are not visible in the final product. Like for example, the supervisor, the cost incurred on supervising, right? So we have kept supervisor and we are paying to them. So now the cost which is which is going for the supervision of the product, it is not visible in the final product. Okay, and especially if that supervisor is for different unit, like for example Pepsi has got Pepsi, Mirinda and other different names for their soft drinks. So there it will be actually very difficult to calculate exactly how much supervision cost should be absorbed on Pepsi, or how much should be absorbed in the Mirinda. Okay, because you have got same supervisor for all these different units. So these costs comes under indirect cost because they are not directly visible in the final product, and also calculation of these costs or absorption of these costs on the finished good is comparatively difficult, and sometimes it may not be economically feasible. Now what do we mean by economically feasible? Economically feasible means the estimation of cost should not create any more cost for you, because even estimation sometimes it create cost for you, because you are putting people there to measure the cost, you are putting time there to measure the cost. So even estimation of cost involves costing, extra cost, right? So if that extra cost is more than the exact cost of the material, then you should leave the process of costing. So that is why. So economically feasible means, because as the example which we took, the metal sheet which is used for manufacturing of can. Now to calculate the exact amount and cost incurred for each can, it is economically feasible, because you don't have to put more pressure or more effort for that. You can simply estimate how much metal has been used and divide that by total number of cans. But sometimes for some indirect cost you may be required to put more people to calculate the cost, more time to calculate the cost. So it may not be economically feasible for you to exactly calculate how much cost it is incurring for each cost. Like for example, the adhesive which is used to paste the company sticker on the can, right? Now these adhesives are comparatively the amount is very less as compared to any other material which are used in the can. So sometimes company may opt for not to calculate the cost of adhesive. So because unnecessarily that doesn't create any much difference for the company, and moreover they don't want to waste time and people and effort to calculate cost for something which may be very negligible as compared to overall cost. So those costs comes under indirect cost. So I'm not telling that indirect costs are not calculated, depending upon how feasible it is to calculate. The companies, they calculate and sometimes they don't calculate. Now there are some costs for which we can identify no relationship to a cost objective. These are unallocated costs. For example, R&D, legal, process design, etc. So R&D, you cannot absorb exact amount of cost for that particular year, and sometimes the effect of R&D can be seen say after 5 years or 10 years. So in those cases it becomes very much difficult for you to exactly trace how much R&D proportion cost should be absorbed in a single unit. So similarly, process design. So let us take an example from our automobile sector. So the cost incurred in the designing of product or cars may not be absorbed completely on the single product or any product which is there currently, okay, because the effect of this process designing may be seen in future. So these costs are termed as unallocated cost. So of course you measure this cost, you estimate this cost, but not as a part of the day-to-day cost or the annual cost. The next classification is product cost and period cost. What about transportation cost of bringing the raw material to the factory? Is it a direct or indirect cost? So normally it is an indirect cost, right? We'll see more a detailed difference of these kind of cost. So the next classification is product cost and period cost. Product costs are costs identified with goods produced or purchased for resale, whereas period costs that are deducted as expense during the current period without going through an inventory stage. Now these two costs differ in terms of where they are happening. So any cost which is happening before the manufacturing or during the manufacturing is known as product cost, and the cost which happens outside the manufacturing process are period costs. Let us take an example. The cost of raw material is a product cost because that is a part of manufacturing process. The cost of labor who are manufacturing the product are product cost because they are incurring in the manufacturing process. The period cost take phone bill expense of the office department. Now the expense on phone bills are not part of the manufacturing process. Of course that is a part of the complete business, but they are not the part of manufacturing process. So these are the period cost. In the same manner, say electricity related to the manufacturing process. So these costs are termed as period cost. Now we will define or classify cost on the basis of elements. The basis of three things. One is on the basis of elements, second is on the basis of function, and third is on the basis of variability. Now first, on the basis of elements. So on the basis of elements we can have three types of cost: material, labor and expenses. I am repeating, on the basis of elements cost can be classified. What about the electricity cost for steel furnaces? Yeah, if electricity is cost, if it is a part of manufacturing process, then that will be product cost. So any cost which is a part of manufacturing process will be product cost. Yeah. So on the basis of elements, cost can be classified into three: material, labor and expenses. Now material, labor and expenses can further be classified into same direct and indirect. So direct material are all those materials which becomes an integral part of the finished product. So as I have taken example of Pepsi can. So the can is material in nature, right? So the nature wise that metal is material. So and it is direct because that is visible in the final product. So it is a material by element and direct by nature. So direct material often do not include minor items such as tags or glue, because the cost of tracing these items are greater than the possible benefit of having more precise product cost. So same, I mean, like for example the adhesive used to paste the brand. So sometimes they are very small, but that again depend upon company to company. Sometimes they may like to calculate these costs, sometimes they may not like to calculate these costs. So for example, say in garment business. So in garment business, if a company is producing shirts, so the thread used to stitch the buttons. So the cost incurred on those threads, company may like to calculate them or they may not like to calculate them. But by nature they are material and by element they are material and by nature they are direct in nature. Then second is indirect. So indirect material costs are those costs which is used indirectly in the production. As I said, for example, we are talking about material. So material, let us take some materials which are used indirectly for the production. Say the machine or materials which are used to mold the can. Okay, so those are not exactly visible in the film and by nature indirect, right? Then second is labor. Now labor, again it can be divided into two: direct labor and indirect labor. Labor means the people, the humans. Okay. Now those people who are playing a direct role in the production are known as the cost is known as direct cost. For example, the laborers who are directly involved in the production, right? Fuel to run machine could be for the machine, they are indirect. So those laborers who are actively directly taking part in the production processes, they are direct labor costs, and usually they are paid in wages. They are not paid salaries, but they are paid wages, and wages are interlinked with the production. The indirect labor which are not directly engaged in the production operation but which helps in the production operation. So as I said, supervisor or storekeeper or gatekeeper, so they are indirectly related to the manufacturing process but not directly, right? And they are paid, normally they are paid salaries or not wages. So because wages they change with the production. If production is more, the wage cost is more. So that is why it is interlinked with the production, but indirect cost it is not interlinked with the production. Expenses. Now those costs which are not labor, which are not material, are expenses, and they can again be divided into two: direct and indirect. Now direct expenses are all expenses other than direct material and direct labor which are directly incurred on a specific product, job or processes. And indirect expenses, but which ask me the cost incurred in bringing the raw material to the factory or on the vehicle or truck or fuel of the truck. So this cost is not material by nature, this is not labor by nature. So this is an expense. and this again can be of two type, direct and indirect. So if that is directly linked with the production, it will be direct. If it is indirectly linked to the production, it will be indirect expense. Now a very important classification, overheads. Now overheads is simply aggregate of all indirect cost, that is indirect material, indirect labor and indirect expenses. So if you add if you add all indirect cost, whether it's material, whether it's labor, whether it is expenses, you can term them as overhead. And depending upon where it is happening, if the overheads are incurring in the factory, then they are factory overhead. If it is occurring in the office or administrative building, then that will be office and administrative overhead. And if it incurs in selling and distribution channel, then it will be selling and distribution overhead. Now see, direct costs, whether it's material, whether it is element, whether it is expense, are comparatively easy to calculate, whereas indirect costs are comparatively very difficult to calculate, because they are not directly sometimes visible, they are not directly linked to production process. So that is why we have got separate chapter here and separate study on the study of indirect costs, which are termed as overhead costs. Now next classification is on the basis of function. So on the basis of function, we have got these kind of classification: prime cost, factory cost, office cost and total cost. Let me just show you a sample cost sheet, and these functional classification then should be more clear to you. So this is one sample cost sheet, and here you can see the cost sheet is used to calculate the the overall cost for any business. So you can see we have started with raw material cost, and the first is direct material consumed, right? So raw materials are material by nature, and they are direct cost because that is directly linked to the production process. So first is directly the material, which is with then B is direct labor or wages, C is direct expenses. Now if you add direct material, direct labor and direct expense, it will give you prime cost. So you can see D is prime cost, which is addition of all these direct cost, which is material, labor and expenses. Now if you add factory overhead to prime cost, you will get factory cost, which is F here. So F is factory cost, which is equal to prime cost plus factory overhead. If you add office and administration overhead to factory cost, it will give you total cost of production, right? Now total cost of production adjusted with finished good and the closing stock and opening stock, it will give you cost of goods sold, which is I. And then if you add selling and distribution overhead to cost of goods sold, it will give you total cost or cost sales. So this is how a cost sheet is prepared, and this is how these costs are estimated. You can see how these are estimated. So prime cost is D, work or factory cost is F, and then office and administration overhead is G. Okay. So this is how functionally this cost can be classified. So prime cost you have seen, this is the addition of direct costs, factory cost, if you add time cost to factory overhead, then office by adding office administration overhead, and then how the total cost should be prepared. So functional classification, when you can understand this using cost sheet. Next is classification as per variability. So how it is varying. So fixed and variable. Now fixed costs are those costs which does not vary but remain fixed or constant. So that cost which doesn't vary with the unit of production are fixed cost in nature, whereas variable cost which varies directly in proportion to every increase or decrease in the volume of production. So if the cost changes exactly with the unit of production, then that will be variable cost. Then semi-variable cost are cost which neither varies proportionally nor remains fixed at all times. So sometimes the cost may not be completely fixed or they may not be completely variable. Now we will take example of all these three types of cost. Fixed costs are cost incurred on machinery, land. Okay, so these costs are if you have purchased land or machinery, so it will be used for a very longer duration of time. Variable cost, raw material cost, right? Wages which are given to the laborers which are directly linked to the manufacturing process. So raw material cost will be changing according to the unit of production. More is the production, more is the raw material cost. Now semi-variable cost, let us take an example of a classroom, right? So if you are if you are taking an example of an educational institute, so the number of rows in a class is fixed. Okay. Now let us suppose a class can accommodate 50 students. Okay, and there are 5 rows with 10 chairs in each row. Now say for some year there is a more admissions, okay, and the institute is required to accommodate at least 70 students in a class. Okay, now here the class has to add 2 rows to the existing rows because they are having 5 rows, so they need to fix 2 more rows to accommodate 70 students. Okay, so here the number of rows getting added will be by nature semi-variable. Because why it is semi-variable? Because each row will have 10 seats. Okay, so the moment one row is added, from 1 to 10 seat the cost is fixed, but if the number of students is exceeding that 10, so then the cost will again change for next 10 students, right? So for each row the cost will become variable, but within a row the cost for chairs will be fixed. Okay, so this is one of the example of semi-variable cost. So semi-variable costs are those costs which are fixed for some interval, then again it changes, then again it is fixed for some time interval, then again it changes. So these kind of costs are semi-variable cost. Then the next classification is relevant cost and irrelevant cost. Relevant costs are those costs which would be changed by the managerial decision, whereas irrelevant costs are those costs which would not be affected by the decision. So relevant cost can actually be controlled, which is under the managerial decision, but irrelevant cost sometimes it cannot be controlled and sometimes it may not be affected by any of the decision taken by managers. So that is why managers are more concerned about relevant cost, because that is the part of the cost which can be controlled. The next is sunk cost. Sunk costs are those costs which have been created by a decision which was made in the past that cannot be changed by any decision that will be made in the future. Now for example, suppose I have opened a restaurant and I have incurred cost for to run that restaurant, cost on tables, chairs, and maybe paints, the posters and the complete ambience of that inside view of that restaurant. Somehow this restaurant business could not do well, and now I want to change into, say, into educational based business. Now if I'm changing the same place, the cost incurred to on the ambience of that restaurant will be sunk cost for me, because I'm not going to recover that cost and for modify the room according to a classroom. I have to modify that room to a classroom. I need to incur cost on benches, chairs. I need to change the color of that room. I have to make it white, whereas for restaurant I had made it flash red. So the expense on colors, the painting and all those things will be sunk cost for me, because I am not going to recover those costs. So those costs which had been created by decision that was made in the past and which cannot be changed by any decision that will be made in the future. Of course, chairs and these things can be sold at a lesser price, but still they will not be considered as sunk cost, because somehow I could recover cost on those things. So sunk costs are those costs which cannot be recovered. Cost concepts for decision making. Which is based on decision involving alternate choices. So there are two ways in which we can estimate the cost. One is through differential costing and one is incremental costing. Differential costing is when you try to find out the difference in total cost between two alternatives. And incremental cost is in case the choice of an alternative result in increase in total cost. Such increased costs are known as incremental cost. So I think we'll understand the difference between differential cost and incremental cost in chapter number 6. So there it should be more clear to you. Opportunity cost. Now opportunity cost it is not a general part of cost management or management accounting, but you will find its more applicability in economics, and it is something advantage which is in measurable terms, which has been foregone on account of not using the facilities in the manner originally planned. So this is a cost which you are ready to forego in order to take an alternative. That's all. But yes, in accounting we don't measure opportunity cost, we don't show opportunity cost, but since it is a type of cost, so I just thought of introducing this concept to you. Now once the costs are classified, once they are known to you, the second step is to ascertain them or to calculate them or to make it absorb to the final or finished product. So the technique of costing involves collection and classification of expenditure according to cost elements, allocation and apportionment of expenditure to the cost centers or cost unit. The cost unit is a unit of product or service in relation to which costs are uncertain. That is typewriters, thousands of washers. So anything for which you are calculating the cost will become cost unit for you. Cost center, it is a production or service location, function, activity or item of equipment for which costs are accumulated. So cost center is basically a homogeneous group, right? For example, office, so that is a cost center. Store, canteen, farm. So any homogeneous grouping can be termed as cost center. For example, for educational institute, say for IMT CDL, so we have got study centers, right? So study centers could be cost center for us, and we may like to see how much cost we are incurring for each cost center. Okay, cost unit could be say cost incurred on the classes, cost incurred on electricity, cost incurred on say projectors. So this all could be cost unit for IMT CDL. Now, before we move to next chapter, Yeah, every department has its own cost center here, and that makes the process a little comfortable for the businesses. Yeah. So in next chapter we are going to move to overhead analysis, which will deal with all the indirect cost. Okay. So till now we have understood the classification based on element, based on function, based on variability, and we have understood the direct costs are comparatively easy to estimate, easy to calculate, but indirect costs are not that easy to calculate and that easy to estimate. One reason why it is difficult is because indirect cost can incur for more than one cost center. Like for example, say a company has got different cost centers, right? Now the electricity which has been used by the businesses, it is common for all the centers, okay, and you don't know how much electricity is consumed by a particular cost center. So in such situation it becomes difficult to absorb the indirect cost exactly to each cost center, right? So that is why we need to ascertain this cost, and how do we do that is we are going to study in the next chapter, which is overhead analysis. So before we if you can do a quick recap of whatever you said, okay, I think I was doing that. See, we started with cost classification. Of course, we started with the general definition of management accounting. Then we introduced the concept of cost classification, and that was done mainly uh, to know how many types of cost can incurred in any business, because unless and until you classify these costs, it becomes difficult for you to exactly calculate the total cost. And calculation of total cost is very important because that affects the calculation of profitability and also to decide the selling price of the product. So we have classified cost on the basis of element. If it is by nature material, then that would be material cost. If by nature it is labor, then that's labor cost. And if it is not material or labor, then that will be expense. Now we have another classification, direct and indirect. Direct costs are those costs which is a finished part of, which is an integral part of the finished product, whereas indirect costs which are indirectly related to the final product. Okay, and material, labor and expenses, all these three costs can further be classified into direct and indirect depending whether they are the integral part of the final or finished good or not. The next classification was on the basis of functionality, where is happening. So we had seen one sample cost sheet where we have seen how these costs are placed and how these are calculated. Then we have defined or classified cost on the basis of variability, whether it is varying with the unit of production or not. If it is varying with unit of production in a proportionate manner, then that is variable cost. If it is a fixed one-time cost and doesn't change with the unit of production, then that is fixed. And if it is fixed for some time and then again it changes and then again it is fixed for next time interval, then that is semi-variable cost. Right. So these are some of the main classification of cost. And other than that, we have defined a few other types of cost: sunk cost, opportunity cost, and these costs. So Now we are moving to overheads, which is your second chapter. Now, as we have already studied, overhead cost is equal to the summation of all indirect cost. That means indirect labor, indirect material, and indirect expenses. So if you add these three types of cost, it gives you overhead cost as for the analysis. So in this chapter, after completion of this chapter, we should be able to understand the meaning of overhead. We should be able to classify the overheads in different categories, and we should be able to explain the different stages for distribution of overheads. Now, overheads are the operating cost of a business enterprise which cannot be traced directly to a particular unit of output. Accounting and control of overhead involves following steps. First, classification. And second, collection or accumulation. Third, departmentalization or allocation and apportionment. The next is reapportionment, and then next, absorption or a charge to cost unit. So because see, these are all indirect in nature, so because they are not visible also, they are not integral part of the finished product. So estimation and absorption of this cost to a particular unit of production becomes very difficult, and that is why we have steps to calculate, to collect the information related to how much cost is incurring in a particular cost center. Then departmentalization or allocation. So then it needs to be allocated to different cost center, and then reapportionment, and finally absorption. So I think these steps will be more clear to you once we will solve some small numericals based on this. So before we move to numerical, again we need to classify overhead. So classification is more or less same with the overall cost classification. So you can see, according to function, if the overheads are happening in factory, that will be factory overhead. If overheads are happening in administration building, that will be administration overhead. If it is happening in the selling and distribution part, that will be selling and distribution overhead. So all those overheads, again, they are all indirect in nature: indirect labor, indirect material, and indirect expenses. Now if you classify overheads on the basis of elements, then it could be material, it could be labor, it could be expenses. So if it is material in nature, it would be indirect material. If it is labor in nature, it would be indirect labor, and if it is expenses in nature, then that will be indirect expenses. According to controllability, so as per controllability, you can have controllable overhead and uncontrollable overhead. The difference between these two is the controllable overhead can be controlled by managerial decision, whereas uncontrollable overhead cannot be controlled, it cannot be changed, it cannot be affected because of the decision. So uncontrollable overhead is beyond control, that will happen. According to variability, again you can have fixed overhead, you can have variable overhead. So fixed overhead, which is one-time cost, which is happened with, doesn't change with the unit of production. But if overhead is changing with unit of production, that will be variable overhead. So next is to estimate overhead, and in order to estimate overhead, sometimes business they do codification, and codification is nothing but it is the method of grouping overheads, allotting numbers, alphabet or symbol to the symbols to the overhead. It helps in the operation of mechanized accounting. It helps to analyze the overhead cost for the purpose of planning and control, to bring the overheads of similar nature into one group, and to help the allocation and apportionment of overheads to different departments or cost center. So sometimes in some businesses you will find some codification, like for example they will codify offices into O1, O2, O3, right, and they can have the staff under O1, the receptionist under O2, the labors in the O3. Okay, so they'll make some homogeneous group and they'll codify that. Similarly, the manufacturing or factory can be codified into factory 1 or factory 2 or factory 3 depending upon what they are keeping under all these classifications. So that just helps in the uniformity. It helps them to kind of bring similar natured overheads into the easy to interpret, easy to calculate, easy to present these overheads in front of their boss or the owners of this firm. So first step is departmentalization of overhead, which includes allocation, apportionment and absorption. Allocation means process of charging the full amount of overhead cost to a particular cost center. Apportionment is the distribution of overhead cost among various departments or cost center on an equitable basis. Absorption is charging of overheads of a cost center to different cost unit in such a way that each cost unit bears an appropriate portion of its share of overhead. Now see, all these costs are indirect in nature, okay, and since they are indirect in nature, so you cannot exactly calculate how much cost should be absorbed in the finished product. Let us take the same example of Pepsi can. Now in Pepsi, let us assume that Pepsi is having a manufacturing setup somewhere, right? So under that manufacturing setup, it produces say Pepsi, it manufactures Mirinda, it manufactures other product like 7-Up also. Okay. Now for some indirect cost, I mean for some of the indirect cost may be common to all these three products, Pepsi, Mirinda as well as 7-Up. Like we took example of supervisor. So the supervisor is supervising all these three units. Okay. Now how to apportion the cost incurred on supervision to all these three products, Pepsi, 7-Up and Mirinda. Now one logic is to see how much production we are having under these three products. Like for example, you may have more production for Pepsi as compared to Mirinda, and you may have more production for Mirinda as compared to 7-Up. So if you compare these three, 7-Up is having the least amount of production, Pepsi is having the maximum amount of production. So logic says the supervision cost for Pepsi should be more than the supervision cost for 7-Up, because the production in 7-Up, for production for 7-Up is less. Alright. So logically it should be distributed on the basis of number of production happening for all these units. So that's what is explained in this slide. It has to be allocated, it has to be apportioned, and then finally it should be absorbed to the final product. Let us take another example, say of IMT CDL. Now in IMT CDL we have got study center where we have got classes. Okay. Now at one time you will find classes going for first semester, classes going for final year, classes going for some specialized subject. So suppose we have got 5 classrooms under one roof. Okay. Now there will be some costs which are unique to classroom. So for example, desk, chair, tube lights in the class. So those costs can be easily traced for the classes, and let us take one class as one cost center. Now there are some costs which are common to all these 5 classes. Suppose the tube light which is installed in the lawn, in the corridor. Now the light given by tube light, it is used or it is consumed by all the 5 classes. Okay. Now how to apportion the cost incurred on these tube lights, I mean in the face of electricity uses for all these 5 classes. Now one is to see which class is having maximum area, because these class may differ in terms of their area, floor area. So logic says more is the floor area, more should be the proportion of electricity used by the classroom. Okay, and if all classrooms are of equal size or same size, then in that case it won't be that much difficult for you to apportion the cost of tube light in the corridor as a total cost. So that is why. So this is this comes under departmentalization of overheads. So sometimes, because we have taken examples where the cost was easily identified, but sometimes it may not be easily identified. So for those kind of situation, these steps becomes very important, very crucial and very necessary. Now, what is the difference between allocation and apportionment? Allocation, where overhead is related with some specific department or cost center. Apportionment is the overhead is related with several department and cost centers. Allocation is a direct process, whereas apportionment, it may be made indirectly and for which suitable bases are to be selected. Allocation deals with the whole items, whereas apportionment deals with the proportion of items of cost. So allocation is simply the allocation of overhead to different cost center, and apportionment is the calculation of how much cost should be shared by each cost center. The difference between apportionment and absorption. Apportionment is simply allotment or allotment of proportion of items of cost to cost center, whereas absorption is the allotment of overhead to cost unit. In absorption, the process of absorption starts after the completion of process of apportionment. In apportionment, proper ratios are used, whereas in absorption, percentage rates of overheads are used. So even though they are different steps, but the method is little different between these two. So you start with allocation, then apportionment, and then you end up with the absorption. So absorption is the step exactly where the costs are absorbed to the final product. These are some of the formula to calculate to do absorption. Like for example, direct material cost method. So which is factory overhead rate, and this is how it can be calculated. Amount of factory overhead divided by cost of direct material used multiplied by 100. You can also absorb through direct labor cost method, and this is the formula through which it can be calculated. And similarly, in your book also you will find different formulas to absorb the cost. So absorption is basically the last step of the costing, the cost which actually gets absorbed in the final product. Then overhead can be classified on the basis of where it is happening. If it is happening in the office and administration part, it will be office and administrative overhead. So administrative overheads are incurred for general management and control of the organization. It incurred for business as a whole. Amount of administrative overhead is generally small and it is generally constant in nature. Selling and distribution overhead, wherein it happens in the selling and distribution part, which is indirect selling and distribution material, indirect sales and distribution labor, and it is indirect selling and distribution expenses. Now, because all these are indirect cost and estimation is also some logic based, so sometimes you tend to over absorb the overhead and sometimes you tend to under absorb the overhead. Over absorption means when the cost has been inflated, the calculation of cost has been inflated. Under absorption means when the cost estimation is deflated. So it could happen because of wrong estimation of overhead expenses. It could happen because of wrong estimation of output of hours to be worked. It could be because of seasonal fluctuation, and sometimes it could be because under or over utilization of product quality or product capacity. So this is the classification of, so we started with classification of cost, and this is the next step was to classify the overheads. And then overheads are nothing but summation of all indirect costs, indirect material, indirect labor, and indirect expenses. And because they are common to different cost centers, so sometimes we need to apply logic to distribute these costs, and then when it is distributed, finally we absorb on the basis of some logical, it could on the basis of some logic. As we have taken example of classes. So in the example of classes, the absorption could be on the basis of floor area. For Pepsi, it was on the basis of the number of units which was produced by different labels. So similarly, you can have these kind of estimation depending upon where it is happening and what is the nature for different businesses. And we are going to solve numericals on overhead estimation, and the thing will be more clear to you once you will see or you will solve the numericals based on allocation of these costs. Okay. So any question so far from whatever we have studied till now? Because from here we are going to move to numericals, and in fact now we are moving to the mathematical part of this subject. The theory part is almost done. Your first unit is completely theory based. Second chapter, the half part is theory based. Now we are completely moving to the numerical part of this subject. So any question, any query, any confusion? Yes, hello class, are you there? Yeah, because I wasn't getting any response, so I was curious whether the class is with me or not. Okay, so clear so far? No question.